Good morning. Happy Friday and welcome to the showdown. Here in the showdown, we do some live trading. So join us and watch how we use our Pip Hunter tool that we use in our VIP sessions to implement these trades and manage these positions. So we're going to do that live today. I got your favorite guest, Big Dog, join me, and we're going to get started right after this.
Alrighty. Good morning, Cameron. What's going on?
Nothing much. And you?
Nothing much. Good morning, traders. Good morning, and welcome to the showdown this morning. Glad to be here once again. And like we always do every time the show starts, first we want to go ahead and dive into some fundamentals. Take a look at what's going on with the market this week and what we're expecting out next week. Now, we did have some CPI numbers come out for the Australians. And those CPI numbers out on Tuesday showed that they were expecting the interest rate to drop down to 3.4%. It actually went up to 3.6%. Now, what does that mean for the market? Well, it means that there's this sort of indication that if inflation numbers are increasing, that there may be hikes in the possible future for the central banks. And that is not good. No one likes interest rate hikes. And what it does is it actually strengthens the currency. Now, we did have a little bit of a jump in the market on Tuesday when the news came out, and we did see the Aussie strengthening with the news. But the thing here is the market's also set up technically, and a lot of people don't really understand that. You know, I have a lot of debates about whether fundamentals lead or technicals lead. And this is a great example of how technicals actually move the market. Now, we had a short-term reaction in the market based on the CPI numbers being high, but overall, it was really the technicals that set up and told us where the direction is going to be. And so all we had was a fake breakout to the upside and then a downside move to the downside, indicating a possible further reversal that's going to be long-term. And so we're going to go in and take a look and see what the market's going to read this week, or at least today, and see if we can find opportunities based on some technical analysis. Traders, I've been doing technical analysis for about 30 years and using a bit of fundamentals in between. So, but I can say for certain that I am absolutely 100% sure that when I look at a technical setup, that I know that there's a higher probability that the market's going to move in that direction. So make sure, traders, that you sharpen up your technical analysis and don't get fundamentally caught. You hear the word I said? Fundamentally caught in fundamentals, all right? Don't let fundamentals shake and bake you to make you so concerned about entering the market based on the technical setup. All right, remember, the fundamentals fulfill the technical moves, and that's really what it comes down to. So with that being said, traders, remember we do have some news that is coming out next week. Some big news, right? Because that is always the first week in the first week of the month is normally the bigger week when it comes to news, because we have CPI numbers coming out, we've got jobs coming out, especially out in the US. And all of that plays a big role as to what the central banks are going to be doing with interest rates. So it's definitely a sort of a cornerstone for the central banks to look at and make decisions as to whether or not they should be raising or cutting interest rates. Now, with the Feds at the moment right now, and FYI, in 2 weeks, we're going to have CPI numbers coming out for the Federal Reserve, as well as interest rate decision. And of course, if we continue to see a downside move in inflation, then the central bank will consider cutting rates, but they won't do it unless we're at the 2% mark or lower, or if the inflation numbers go down too quickly, because it's like a huge rock falling, right? They got to slow it down. And the only way they can slow it down is to possibly go ahead and keep interest rates as is, or even possibly cut interest rates, right? So if inflation is falling too fast, if they cut interest rate, it'll stimulate spending. Spending will create high inflation, and high inflation would mean that if they've got a downside trend in inflation, we're going to have a bounce and a pushback. So that's what they're trying to do, and all of this plays a role: jobs, housing, GDP. All of this information is important to define what the market's going to do, and of course, CPI is one of those key factors as well. So with that being said, traders, let's go ahead and get the showdown on the road. Trust everyone's had a great week so far. It's been a very short week for many in the US with the Memorial Day on Monday. And next week, we've got a full week ahead of us with news and fundamentals. And so it's going to be exciting to see how the markets react. And it's going to be exciting to see how Cameron shapes up and figures out how to trade this market this morning. So I don't normally do this right in the beginning stages, but I'm going to go ahead and do that. If anyone's looking for a broker and you do not have one, or you'd like to move to a broker that's going to be a lot more effective with regards to placing your trades and giving you the right pricing and all that good stuff, if you're looking for a good broker, check out ACAP. Let's roll it. And Cameron's muted. All right. Have you ever seen when you've got certain people, when you're running a news program, they go, all right, and then this happened. Let's roll it, and then it's not happening. And
I was muted. I was trying to tell you, hold up. My mouse was like lagging.
Okay. All right. Well, we're good. All right, traders. Well, let's go ahead and get the show on the road. Right. Once again, if you want a broker, check out ACAP. They've done absolutely wonders for the students that we have referred to them. Make sure you use our broker link, and if you do, I want to make sure that we're helping you get started in this market. Sometimes it can be really tough. Trust me, I started 30 years ago, and in the first 2 weeks, everything that I had, I blew in 2 weeks. I absolutely blew it up in 2 weeks because I did not know what I was doing, and I didn't know how to be able to profit from this market. We want to help you guys get a good start in this, set you on the right path, and so make sure that you reach out to us. We want to be able to offer you some free products that can be able to get you started and moving in this market. Traders Network Clubs is all about helping other traders. All right, this is our way of giving back. This is a way of us getting more involved in the community, which we have a great community of traders at the moment right now in our trading rooms. And so make sure you guys check out the VIP products, VIP 1, 2, and 3, or the bundle. The bundle, you get all 3 of them. It's fantastic. And of course, you get access to the Discord channel. And you got daily communication with Cameron, daily live sessions. It's really awesome, guys. You got to go ahead and get involved. And we're having some great fun in those Discord channels. All right. With that being said, we said you guys are all here for one thing only, right? Some trade setups. So let's go ahead and get started, Cameron. I'm going to give you the reins because I have been talking for that much.
Okay.
And so go ahead and share your screen, and let's go ahead and fire some trades.
All right. Well, I was already planning on looking at the US dollar CAD and the Euro US dollar because we're in the money in our VIP session. And we're targeting on the US dollar CAD, we're targeting let me see, I forgot. I think it was 209. Let me look at my Discord here. US dollar CAD, we are targeting 390. So here's the US dollar CAD. So we are targeting 390 net pips. And we're in the money right now. This is our break even here at 36.68. We created a BPR. We came back, retested it. So now I know that we're hunting sell side liquidity. My bias this week has been expecting for price to sweep sell side and this liquidity run that we've generated before going ahead and continuing higher. Because if you look at the daily years, let me zoom out a little bit here. We are targeting external buy side here. We have generated all this buy side liquidity, looking for this manipulation, looking to sweep all the sell side liquidity here, and then our external liquidity buy side range is where we've been anticipating that price is going to continue to move to. We're just now expecting this manipulation. And by looking now at the 4-hour here, you can see all this generated liquidity is giving us more bias that once we have swept this area, we are now looking to hunt all this buy side liquidity, targeting our external liquidity range. Okay. So this is our target as of for today, this sell side right here. Okay. And that's for our VIP. That's going to be 390 net pips. But for today's show, we are only targeting 20 pips. And we have about 36 pips to the downside here to the sell side liquidity. So we can jump in here and sell right away as we're targeting for only 20 net pips.
Fantastic. And I like the fact that we're going to continue to ride the wave down south. And we have been. And traders, if you actually look at the bigger picture, and just before I do that, Cameron's busy using the trading tools now. This is one of the trading tools that we use in the VIP sessions that you'll get access to. That's going to be able to help you manage your trade, get you into the trade quicker, because that's all the tools we use and the things we do inside the trading rooms is to help you get in and out of the markets really quick. And we do have full automation as well if you're interested, for those that say, hey, Big Dog, I don't know how to use the tools. I'm not very computer literate. How can I get involved in just getting my trades executed? We have a plan for you there as well. So we have your back on that too. So the thing here is with the US dollar, right? With the US dollar CAD, the biggest thing on the US dollar CAD, Cameron, that you didn't mention here is that if you actually look at the daily time frame, we actually have the US dollar CAD in a range between 138.50, give or take a few, and 132.50. So it's in this big range. Go ahead and compress the charts more. Really tight. Like, yeah, there we go. If you look over there, look at the tops and bottoms right here. You could equalize on the top and equalize on the bottom right there. And so we definitely have the market that's just come off the top there, around about 38 and change. And we're heading down. Now, obviously, we've got to break through that trend line that Cameron's got there that's up. Got an upward trend line that we needed the market to break below that. So we'll get the market to go ahead and sweep and raid that stop at that SSL, which is the south side liquidity area. So definitely we're going to go ahead and raid that stop. And then we're going to go ahead and break through that trend line. That's going to be the next thing. And once we break through there, is a big sell-off down to around about 32.50. So, sometimes traders, when you really don't know what the short-term direction is, just make sure you have a good idea what the long-term direction is. Because if you're wrong, but you're on the right side of the trend with the long-term trend, then it's just a matter of surviving through that sort of noise before the market ends up going in your direction. So remember that. If you cannot win the battle, then make sure you win the war, right? Because there's going to be many battles, but you don't want to be a champion in battles and lose the war, which means that you win some trades, but you blow up your trading account, right? So you want to make sure that you're winning the war and getting a fair chance at the battle, right? But the thing here is, the most important thing here is making sure you understand directional bias. And so with that being said, Cameron, I'm going to go ahead and jump into the Canadian. All right, this is CAD Swiss right here. Now, I know that a lot of people following our trade ideas, especially my trade ideas, are caught up in the CAD Swiss. And so let me do this. If I look at this pair and I take away all of this noise with the technical analysis, and you look over here, what are you looking at, right? Now, if you said you're looking at my chart, you're right, but what are you looking at? What are you looking at? So you're looking at resistance up here. We're looking at support down here. But traders this year, you've got to realize trading is that simple, right? It's got to be. Look, I know it's not that simple, when I say it's that simple, but it's not that simple because there's a lot of fundamentals that you need to know. But it's that simple. You just have to look at the charts like a child, right? Say it the way it is. Sometimes we try be a little more technical, or to try to be a little more like, well, you know what? I've got to be a professional at this, so I've got to look for something. There's something more involved. All right. And so they dig so deep into the charts and they talk about all these little things and big things, and it makes you sound all intelligent and like you know what you're talking about. But the honest truth, traders been doing this for 30 years. Just look at the charts and speak out what you see, because that's really what it is. And right now, if I look at the chart right here, all I'm seeing is price coming up to resistance. All right. And we can see how there's been rejection off that level a few times. Now, price comes down to support. What do we have? We have price rejection. So here we're expecting price rejection. We had a little bit of that. Then price came down below here. Okay, that's fine. But does it last? All right, everything's about longevity. Does something last? If it doesn't last, then you're either going to be seeing a correction move, all right, in the opposite side, or the market's going to continue, right? And so in this case now, here we have the market trying to break below, then coming back up, creating this bull crown pattern right here, and off it goes. It's using this again as a support level. So we have good support here. Guess what? When the market bounces off Florida or the Keys, it's on its way to New York. All right, that's what it is. It bounces back between support and resistance. So let's go ahead and say that this was the Keys. All right, we bounced back in, we got back into Florida, and here is New York up here at the top. We're heading to New York, my friends, and there's many ways to take that trip. All right, and so when we look at the market right here and we look at this, some traders get really concerned. But again, let's just break this down. Think about this. And I teach about Elliott wave structure. Which waves in the Elliott wave structure do we see consolidation? Ask that question, right? And we'll know that there are two waves, wave 2 and wave 4, that we will see consolidation. Now, consolidation is part of a bullish trend, all right? It is. The market goes ahead and rallies. Then we have accumulation, which is consolidation. And then the market breaks out when we start seeing distribution, right? So this is what we're going to do. This is what we're going to go ahead and see. We're going to see the market testing that area, this area, that area, this area. But now what's going to happen is once the market is done and it's now got enough momentum and volume behind it, we're going to see breakout. And breakout would mean that price is going to come back up here because traders, the market moves in waves. And this is the fourth wave because check this out. This right here is a large wave 1, right? We have a large wave 2 down here. Now we have an inside structure. 1, 2, this is 3 up here, and this is 4. So guess what? We're in a fourth wave consolidation. And then we go and you see price chasing after the fifth wave. Now, what's nice about this structure is that this is an inside structure. So which means that when the fifth wave is complete, what are we then seeing? We're seeing a large wave 1, wave 2, wave 3 is all the way up here when we complete this fifth wave 4, and then wave 5, which means traders that we're probably going to go higher than that consolidation. We're going to see a breakout to the upside that's going to give us more potential on this. Okay, so why am I giving you all of this, right? Because you're probably saying, well, Big Dog, you're sounding like you're just saying a lot of stuff, but what does it really mean for us right now? Most important thing, traders, is when you're wrong with the battle, if you make a mistake on the short-term decision, like if you try and put a trade in and you're wrong, at least make sure you're right on the long term, all right? And if you're not, then make sure that you know where the market's going to before it turns around and heads back in your direction. All right, very important. And that's why traders joining a community and having an expert trader or someone that you can follow and have mentored is going to help you with these type of things. All right. So when we go to this pair right here, and we're at support, my strategy is very, very simple. All right. Now we can get a lot more technical on this, but at the end of the day, what do we do when we're at support? It's that simple. Traders, like a child of 2 years old or 3 years old. In fact, I can bring my grandson here. He's 2.5, and I can tell you right now, if I ask him, do I buy or do I sell? I'm almost guaranteed he's going to say we're going to buy, because they understand support and resistance from a simple concept. All right. And so right now I'm going to buy. Now let's go ahead and throw this in. All right. First, I'm going to tell Cam to throw in a trade right now. So
I believe Cat Swiss, we actually have positions already in the Cat Swiss.
Oh, we do. And
Yeah,
tell me we're going to buy.
Yeah, we have 4 buy positions.
Fantastic. Okay, so last week Friday we put a buy in, and this actually confirms my point right here. All right, last week we put a buy in, and we probably put in. Can you tell me what the first entry point is on that buy, Cam? Just tell me what the first entry point, what that price was for that buy. Now, while Cameron's telling me that, this is the thing, traders. If we buy,
first buy was never mind. It was
66.
Can't really tell. It doesn't really show.
You got to look at the order flow inside the order. All right, so it doesn't really matter. All right, let's go here. Let's just say, for argument's sake, is that I'm going to give it right up here at the top. I'm going to say 66.50. So if we're in at 66.50 right here, all right, 66.50 is in the middle of the range. It is in the middle of the range. All right. Now, why would that be okay? That would be okay because we're expecting price to break through here. Now, if price comes down, we'll pick up some multiple positions. How many positions do we have on this, Cam? 3, 4?
4.
4. All right. So
first one was at 66.60.
Okay, so 66.60, very close. All right, so 66.60. All right, so when price comes down, all right, then we're going to add in multiple positions. Now, the only time we're going to not be concerned, but the only time we're going to dig deeper into this market analysis is if the market breaks through here. Because if it breaks through here, then what we're going to look for is that, all right, if it's breaking through here, where can price go to?
Oh, 66.85. I didn't see that. All
right,
that was the second position.
66.85. All right, yeah. 66.85. No problem. All right. So if the market breaks through the support right here, right, we got to ask ourselves, where's price going to? Now, Kevin Stowe has spoken about buy side liquidity, sell side liquidity. Now, if we as traders could believe that the market's constantly chasing after resistance and support levels. Why? Because these are where liquidity lies. We're talking about buyers and sellers. Whether you're selling and you've got stop losses above a certain high, or you're buying and you've got stop losses below a certain low, there are liquidity areas where we have what we call the dumb money placing their orders. And so the smart money doesn't necessarily push the market there, but they may be able to manipulate the market in some way to be able to drive price, because what they're looking for is they're looking for these liquidity areas. All right. They're looking to find where the order flows are at, where order books are sitting. And what they're trying to do is they're trying to get the market to push through and then break in the opposite direction. And that's really what it is. So I wouldn't be surprised that if we get a little push like we did right here, a little push right here, and it's not your broker trying to hunt for your stops. We all know that there are brokers that hunt stops, right? They've got actually software that hunts your stops and get you out of the market. We know that. And so, therefore, you should never show your cards. Has anyone played poker before? All right. You don't go ahead and collect your cards and put your cards on the table so everyone can see it, right? Why would we do that as traders? So why do we put actual stop losses with brokers? Because they're not going to fill us at the price we want if there's a huge fundamental announcement. If there's a huge fundamental announcement, what's going to happen? If price pushes through 100 pips through your stop loss, guess what price they're going to fill your stop loss at? The next available price. So when people look at it, you've got to trade with stop losses because it protects your position. Traders, it doesn't protect your position when it comes to news announcements or big fundamental pushes through the market or flash crashes. It doesn't protect your position. All right. Now, some traders say, well, it's good to have it because it's sort of a commitment that you're going to go ahead and close yourself out of that position. So look, yeah, if you've got a discipline problem, you might have a problem with trading. All right. So you have to be a disciplined trader. If the market gets to a certain level, I get it. People might say, well, you know what, maybe it'll go off, maybe it won't take me out yet, or maybe the market's going to bounce off there. So you remove your stop loss. And I bet you 110% of the time that traders that have stop losses tend to move their stop loss. I've done that. How many times have you gone in and you've had a stop loss, right? And the market, especially when you early stages of trading, and you go and you see the market getting closer to your stop loss, what do? Either remove it or move it down. And then it gets closer. You're like, you know what? I think it's going to bounce here. Let me go ahead and move it down, or let me remove my stop. So you're breaking all the rules, and you've shown an undisciplined, you've shown yourself as an undisciplined trader. All right. So why place stop losses? Use a different strategy that you don't get emotionally attached to your stop loss, and you can allow the market to do what it needs to do without being emotionally, attached to that trade. So there's a lot of things that traders need to understand about stop loss. It's not just like, hey, you got to place a stop loss on. Now, those are a lot of words, and I want to find out what is our break even, Cameron, on this trade.
on the cat Swiss is 66.48.
All right, so 66.48 is our break even point right here. We're still going to chase off the 20 pips. We got 4 positions in, so which means that at 66.48. 4 positions in, we're looking at 5 pips above our break-even point, which means that we're going to be looking to get out at around about 66.52. Now, we can increase this target. If we have this belief that price is going to go all the way up here and test that 6,700, maybe even go higher, but for right now, we could actually target the market. We can actually target 6,700. So which means that we can actually chase after 52 net pips, and 52 net pips times that by 4 positions is how much? It's a 204, right? So 208, sorry. So we can go for 208 pips net instead of just the 20 pips. So traders, when you get a little bit more get a little bit more qualified in understanding the markets, where the markets are going, then you can chase after larger positions. And that's something like what Cameron does in his trading room, right? In the VIP trading rooms, he not only goes ahead and places these trades, but he also breaks it down and says, hey, you know what? We can chase after 208 on this trade. We don't have to chase after just the 20 pips. 20 pips is a starting point, all right? But as you get more advanced in it, now you start looking and going, you know what? I'm adding multiple positions on this. I'm not going to chase after 20 pips on this. I want to get 208 pips on this. All right. And so those are the things that we're going to go ahead and do. So right now, traders, my sort of view of the CAD Swiss right here is that we're at support. I'm expecting the bounce, and I'm expecting price to go back up here to 6,700, and then eventually over time, all right? And we've already did the calculations, right? We've already worked out, based on the consolidation we've seen, that we're probably going to take between 2 to 4 months before price moves up to our target. So we're in that 2-month period right now. So we should be seeing profit over the next month or so, reaching our 68.30 level between a month or 2 from now. So let's take a look and see how that plays out. Anyway, let's see what other positions are looking like right now, Cam.
Yeah. So yeah, we got the Euro US dollar available, so I can go ahead and break that down, and then we have the Aussie CAD available.
Okay, cool. Let's go check it out. Hey, by the way, traders, if you want to follow our trades, we do everything transparent here inside these shows. I want to make sure that everyone understands, number one, we have got live trading accounts, right? This is not demo. I think this is a disclaimer that needs to be made. We got live trading accounts. We show you exactly where we're entering, and we also send out trade signals of exactly our orders that we place. If you'd like to follow that, you can do that at your own risk. Again, disclaimer, own risk. And then also number two, what I also like to go ahead and let you guys know is that this show is for educational purposes only. All right. So make sure that you understand that we are doing this for educational purposes only. and make absolutely certain that when you do follow, this is for education purposes. All right? All right. So go ahead, Cam. Muted, my friend.
Thank you. Sorry, I have like these people working outside here, and they're
No, that's
buzzing
okay.
really
You're good.
loud.
You're good.
So I got Euro US dollar. So we talked about the positions we're holding the US dollar CAD. Now looking at the Euro US dollar, we are targeting here in the Euro US dollar. I said 208 net pips, targeting this buy side liquidity. So looking at the 4 hour here, as you can see, looking at this market maker model, we are on the buy side of the curve. Okay, and um, and we got in some positions as price went ahead and created this manipulation. So yellow was our stop rate, tapped into this fair value gap. We tapped into EQ. Okay, moved to discount, got nice displacement. So we know that we're hunting buy side liquidity. You can see the displacement. And one thing I want to say is that not only that we're hunting this buy side liquidity, I would expect for us to go ahead and sweep all of this buy side liquidity and finish this external model. Okay, completing this external model, hunting that external buy side liquidity range. So I'm pretty bullish here on the Euro US dollar, just like I'm bearish on the US dollar CAD. So right now my target for the day is this buy side liquidity right here. Going to the 1 hour here. Do we have enough to target that with 20 pips? And that would be 208 pips there for 208 net pips there for our VIP. We got about 30 pips to the upside. So I'm gonna quickly go ahead and buy here on the Euro US dollar. And looking at the 1 hour here, we're getting just a retracement here, rebalancing this bullish imbalance candle. So we have a 1 hour fair value gap here, looking for price to rebalance this area. And if we see some displacement off this area, we should be sweeping this buy side liquidity very soon here. So pretty easy setups on the Euro US dollar and the US dollar CAD, as it's shown a lot of displacement moving into areas of liquidity, and we're just targeting those areas. All right. And then Aussie CAD's available for you, Big Dog, if you want to take that one.
Aussie CAD. All right. It's all good. Let me roll on the Aussie CAD then. All right. So Aussie CAD, let's take a look right here. Traders, once again, let's take a look at what the bigger picture looks like here. All right. First, number one, we got to know where the market's going, right? And so if we're looking at the setup here on the daily time frame, what do we got? We've got the market in support down here. We had a big rally up here. We saw the market take out the major high right here, create a new major high. Then we swept the lows right here. And now prices come back up to this area right here. So I'm looking at this and I'm saying, you know what? The first thing I picked up here on the daily is that, let's see if I got any technical analysis here. Yes, I do. All right. So I see that we've got this 5-way structure going up here. But then also I noticed that the market has taken out the high right here. We've got all these highs up here at the top that has gone in swept right here. And then if I look at the inside structure, I notice that we've got resistance coming off this trend line right here. Quite a bit, in fact. And now price has gone back below that. So we're back on the right side of this trend line, which makes me believe that price is going to come back to fill some support areas. And so these fair value gaps right here are good places that price will fill these market setups. So if I look over here on the lower time frame, because I've got to break this down. So already I'm thinking, all right, I'm thinking bearish. And the reason why I'm thinking bearish based on this daily is because if you take a look over here, that low, we're looking for price to go ahead and target the low. Now, what's important is this previous high right there, right? Do you see that previous high? Let me see if I can clean up the chart here a little bit here, and you can see it there. There it is. So if you look over here, that high right there, that is important. Look how the market's rejected, not once, but now 4 times, maybe even 5 times here. It's rejected, which means that we haven't able to close above that, all right? And so this high right there at 90.77 is pretty solid. So what I'm going to do here is I'm going to go down to my lower time frame, Oh, and look at that. We're already below that. 90.77. And let's go ahead and put in, let's do this. Let's put in a horizontal line here at 90.77. Right there. Hang on, wait. There it is there. Let's double check and make sure. Oh, yeah, there it is there. So that's the daily high right there. That must be it. So if we go back to the daily time frame, let's see if I've got that high. Did I read that right? Why does it look like it's different? Oh, no, it is on the right place. Okay, for a minute, all right, so there it is there. All right, we got it right there, 90.77. So now what I do is I take a look at the daily, and this is another thing that you can take a look at. Look at daily biases here, all right? So you have the market close out. This is what you got to look at. You got the market closing out with a bearish candle right here. And then since the market closed out with this candle, notice how we are unable to break below this low or that high right here. So since then, the market has moved sideways. So which means, traders, that I have to consider this to be consolidation. And if I anticipate price taking out that low, then I'm expecting price to move down, which means I've got to look for reversals here on the top. So we've got to move down to the lower time frame to understand where that's at. So let me go down to the 5 and take a look right here. This is beautiful. All right. On the 5-minute time frame, I've already seen price going up, creating a new high, creating a low, taking out the high right here, and then we have, well, slight bit of displacement. We have a market shift right here. So we have market structure shift right here. And so we have a reversal on a 5-minute time frame. And so if that's the case, I would love to start selling in this region. But I'm expecting price to continue to work his way up, work his way down towards the support level. So let's go ahead and measure the distance. So from here to here, that's 14 pips. You see why it's important to get up here? If I get up here and I sell up there, I'm going to be able to get to that 20 pips because it'll sweep that low, which means we'll go for a little lower. In fact, we're probably going to sweep the low down here. So if the market's going to sweep this low down here, then do I have at least 20 pips in this? Here I have 18. Market will probably push a little bit lower than that. Cameron, I don't have the time to wait for it to pull back up again. So which means I'm going to go ahead and short the Aussie right now, Aussie CAD, with the expectation that price is going to move further down south. And I think we may have missed this little extra push of 1 or 2 pips here. What did we get, Cameron? There we go. All right, there we go. We're short on the market right now, and we're looking for price to continue to work his way back down. Now, I'm going to prepare everyone at the moment right now based on some things here. All right, let me go ahead and prepare you. And this is the thing that I want to prepare you for. There is a possibility that price is going to fill up this gap. You can see right here, we have a fair value gap. We have a breaker block right here. So we have a lot of reason for price to want to move back up. So if you want to wait a little longer and get a little extra pips on this trade, because remember, if you're chasing after 20 pips, traders, you want to at least, you want to at least make sure that you got the best opportunity. And so waiting for price to move up another 5 pips might just increase your possibility of closing out the trade quicker. All right. And so there is this possibility that price is going to go up here, and we're going to go up and test around about 90.87. So price is at now 90.80. So that's about another 7 pip opportunity. And remember, 7 pips is almost 50%. You can call it 45% of the actual move that you're looking for, right? It's 45%. So which means that if you wait a little longer, you could get that. Now, the other downside is, of course, you could miss the opportunity and price could just move down, and that is what it is. But there's the opportunity that is presenting itself right here. So we're now selling Aussie Canadian dollar. All right, Cam, what do we have with regards to anything else?
That's it. We're holding 2 positions on the New Zealand CAD.
All right. So we got 2 positions on New Zealand CAD. We are selling New Zealand CAD at the moment right now. Our break-even point is at 87 to 72. We're selling the Aussie CAD.
83.72.
Sorry, 83. Thank you. 83, so 0.8372 is our break even on the New Zealand CAD. Aussie CAD is at 90.79. All right, we're at break even right now. And then we're looking at the US dollar CAD. We are selling US dollar CAD. We get a little bit of a bounce. That's okay. And that is at our price is at 36.27. And then we're looking at the euro US dollar, and we currently are long Euro US dollar with just 9 pips down on that one. Again, a little bit of a correction before the next rally. And then the Swiss, the CAD Swiss, we've got 4 positions on that, and we're currently buying, and we're looking at a break-even point at 66.48. Traders, well, that pretty much wraps up the Friday session here. Hopefully everyone had a fantastic time here. We had a good time, me and Cameron. Want to make sure you guys are subscribed to the channel. Go ahead and subscribe to the channel. Make sure you go ahead and absolutely click on the like button. Smash that like button like it's nobody's business. And if you like the video, like I said, go ahead and click the like button. If you did not like the video, go ahead and click twice on the dislike button. Click it twice. You know where I'm going with this. All right. So, traders, that's pretty much the wrap over here. Thank you very much for your time. Appreciate everyone being here. And with that being said, Cameron, I want to wish you a fantastic weekend. We'll see you guys next time. Cheerio.